Citigroup's Ray McGuire was named the head of investment banking back in 2009. And since then, he has survived all of the post-crisis reshuffling that the firm has gone through. He must now address new challenges, including heightened regulation as well as falling revenue in his division. Citi's Ray McGuire is standing by with our very own Stephanie Ruhle at the Milken Conference in Los Angeles. Steph, take it away.
Thanks, Scar. That is right. I am sitting here with Ray McGuire. He's the global head of corporate and investment banking at Citibank. Now, Ray, we need to talk about your strategic plan. Last year, you were in a building mode. By July, you had hired as many as 40 MDs into the banking division. And fast forward to January of this year, you had relatively disappointing results. How has your strategic plan changed? I mean, you were really in building mode, and then it was a tough year.
The definition of disappointing results, I think if you look at our performance, first quarter this year relative to the first quarter last year where we've made investments, we're beginning to generate a return on those investments. In fact, first quarter this year was up 2% over first quarter last year.
But M&A was down 23%.
M&A, that's the overall market, yes. M&A was down, but if you think about our overall episodic business, our lower episodic business was up. We gained wallet share. We were in announced M&A. We were in the top 3 in announced M&A. We're certainly in the top 3 in debt capital markets, and we're number 1 in equity capital markets. So M&A, yes, that's a lagging indicator. What you're referring to is completed M&A transactions, not announced M&A transactions.
Well, what do you think M&A is going to look like for the coming quarters then?
The leading indicators would suggest that we should have an increase in M&A. And what are those leading indicators? Historically, they have been the volatility index, which is the VIX, the confidence index, which measures both CEO and consumer confidence, and also the S&P. And today you can see that each one of those measures is on the uptick. And so if you look at those measures and you combine them with the following 3 factors, we have significant cash on the balance sheets of corporations. We have the S&P that today is reported, 60% of the S&P that is reported, 71% of those reporting have beat expectations.
Well, what about the 1,200 jobs that Vikram Pandit said he may cut both in the securities and banking business? Is that not necessarily specific to how Citi is performing, but just the overall market, there's less business to do?
I think in every environment, notwithstanding where we are in this environment, every environment there's an opportunity to operate more efficiently. So the plans that we have are not dissimilar to the plans that you're going to find in most other corporations around the world, and that is plans to make certain they operate more efficiently than what we've operated historically. There is always opportunity to operate more efficiently.
Well, while the fees are shrinking, how do you work around that? How do you answer to your shareholders, we're going to make big numbers, when the reality is fees are going down?
Well, it depends on where you're describing fees are going down. I think in some of the emerging markets, the wallet opportunities are less than what they are, and that's because of the development of those markets. But in North America, certainly we're not seeing the fee compression that you're referring to.
Well, in the M&A space then, where do you see the best opportunities?
Well, if you think about how we're positioned, you think about those opportunities. We today are and have been, and by the way, this is our 200th year anniversary, we have been America's global bank. Today we're the world's global bank. And so where do we see opportunities coming from? We see opportunities coming from a lot of what's taking place in the emerging markets. The U.S. today remains the largest wallet share. Today it's 50%, it having taken up some of the slack that has occurred in Western Europe primarily. So we do see growth on the horizon. It's going to be somewhat muted for the following 3 factors. You have a macroeconomic environment that today has caused a fair amount of uncertainty. You have a geopolitical environment, and if you think about what's taking place in 59 countries around the world, we will see a change in leadership, either at the state, local, or federal level. You will see in addition to the macroeconomic environment, you got to look at the regulatory environment. Today, we are now transitioning to a Basel III environment. And by the way, when it gets to Basel, we're one of the most well-capitalized financial institutions in the world.
But Basel III points to it being difficult as far as what your results will be. Are your shareholders prepared for things just being smaller?
Well, I think that the Basel III doesn't apply only to Citi. Basel III applies to the entire financial institutions world. So when it comes to Basel III, if you look at our Basel III positioning today, we estimate at the end of the first quarter we'll be at 7.2%. Basel III, we're at 12.4% when it comes to Basel I. So when it comes to our capitalization, we are as well capitalized as any. that supports the strategy that we have. And as you know, our strategy spans the consumer business, it spans the corporations, it spans the investor base, and importantly, it supports governments around the world. So we think we have the right strategy, we have the capital base to support that strategy, and notwithstanding some of the headwinds that I've outlined, we think we're as well positioned as any.
Well, good luck to you. That's Ray McGuire, Global Head of Corporate and Investment Banking at Citibank.